Hello and welcome to Raise Your Average. I'm Pierre Daly, managing editor at advisoranalyst.com. My co-hosts are Adam Butler and Mike Philbrick, principals at Resolve Asset Management Global. Our esteemed and very special guest is none other than Hugh Hendry, also known as the Acid Capitalist, illustrious founder of Eclectica Asset Management, an award-winning hedge fund manager, market commentator, and in our humble opinion, one of the most eloquent and illuminating observers of absurdly sound intellect. He was one of among a tiny minority of global macro investors in the mid-2000s who had cobbled well-informed and well-investigated views of what was actually happening to the financial system and markets. When we were in the throes of the excruciatingly painful collapse of global financial markets and the period following, Hugh emerged prominently as one of the very few who could cut through the noise and make sense of it all. As for us at advisoranalyst.com, being able to share Hugh's comprehensive views with you played a pivotal role for us as a purveyor of expert financial perspective to the financial industry. So stay tuned. Hugh Hendry is here. If you're liking the show, hit that subscribe button, like us, and by all means, leave comments.
The views and opinions expressed in this broadcast are those of the individual guests and do not necessarily reflect the official policy or position of advisoranalyst.com or of our guests. This broadcast is meant to be for informational purposes only. Nothing discussed in this broadcast is intended to be considered as advice.
So Hugh, first of all, to say it's extremely exciting to have you with us would be putting it very mildly. It's an honor and a privilege. Thank you so much for joining us on Raise Your Average.
I mean, I think anyone joining and hearing that intro, they'll be like, "Who that guy? You know, I'm definitely doing my best John McAfee type impersonation. Look as if I'm in prison in St. Bart's. By way of explanation, I am living, I'm living the Truman Show for sure, and I'm well advanced in constructing another Great Gatsby style house here on the beautiful island of St. Bart's, but I'm living in the damn thing, and there you go. Hey, listen, I've got it.
Work is being done.
The evening is drawing to a close, so we won't be interrupted by noise. And I'd rather have elegance in wordsmith than anything sartorial. So I'm hot. I've got no air conditioning. I've got mosquitoes all over me. But let's have a go.
Jesus, perfect. That's your top four. I think it's worth talking about too where we are, like what the date and time is, because during periods like this, the sense of time contracts, right? And so It is 4:10 Eastern on February 28th. And this is the Monday after the European community and the US and Canada and Australia and other major countries took maybe more draconian steps than expected over the weekend in cutting Russia off from access, or Russian banking sector off from the SWIFT system.
Yeah.
And there was pretty fearful response over the weekend and overnight. I think a lot of people were concerned about what was going to happen today. And it's been a bit of a nothing burger. You know, we definitely had a mild spike in commodities. They're now back approaching the levels that they were at when Putin first invaded Ukraine, but markets have bounced. They've sustained their strength last week and again this week. And so that is the context in which we're having this discussion, right? Because
it's a bit of a dumpster fire.
Yeah. If it was tomorrow, who knows what the context would be. So that's sitting at the table. So, you know, obviously we're in very interesting times. What's on your mind? What are you watching, Hugh, that you think many analysts and market participants are not focused on at this time, but which you think may end up being the most interesting surprise over the next little while?
Heavens, it sounds like the the entrance examination for the Chinese civil service. Tell us everything you know. Where to begin? So a couple of things are coming together at the same time. We've borne witness, our generation has borne witness to arguably the greatest bull market ever, which is this 4-decade rise in US government bond prices, or its corollary, the decline in yields from 16% to 0.4 in the midst of the virus in 2020. And we have this presumption that nothing lasts forever, that there's ultimately corrective powers, which then, something happens and change is introduced and a new course is set. And so there's much speculation. And there's been much speculation for quite some time, for numerous years, that the treasury market is closer, or indeed it's in the throes of that change. So that's going on. Obviously, as you allude to, the profound tragic theatre within Europe, with Vladimir the Blunderer blundering around, exposes many things. So yes, hurrah for seeing a bit of spine emerging in reaction from European political leaders. However, when you ask me what I've been focusing on, I've been focusing on the profound catastrophe of strategic sovereign decision-making and planning, which pertains to this lot and their predecessors, in the sense that they have allowed themselves to be kind of taken hostage by, there's a profoundly well-meaning but irrational ecological movement, which is seeking the absolute abolition of all carbon emissions. And Europe has been quite advanced in making it almost impossible to permit and discover new sources of energy within its domain. So, which is a long way of saying Europe really doesn't produce energy. And the error that I was alluding to really is how it has chosen to address that. And that is really accepting the cheap bounty of Russian gas as being, the solution. And that was profoundly poor decision-making on behalf of the Europeans, because Russia just has not demonstrated that it is a democratic sovereign that is worthy of one entering into very long-term contracts of such major import. And there's nothing we can do about that, in the sense that we have lost any immediate timeline to react. So even the headlines of SWIFT and the Russian stock market being down and the ruble being down, I think beyond the headlines, they're still going to pay them for the gas. The psycho killer Vladimir at any moment could just switch everything off and lights across Europe would go down, which is preposterous. And so the alternatives, there are no alternatives. There are no, in terms of this generation, there are no alternatives. LNG, okay, they've been too slow. And then I am bitterly opposed to LNG. LNG is all about, is a solution for the transport of natural gas. Natural gas is very difficult to transport. The natural gas Henry Hub, the most famous market, the American market, is a local market. People buying Henry Hub because of Russia don't understand gas markets. Mm-hmm. And I've only really come to understand them recently. But the appeal of natural gas is that it emits half the carbon of coal. And so we, as a mature democracy and an educated democracy, we are coming to recognize that the window to attack the ozone layer with carbon has to become less and less, which has to become scarce, has to be priced. It's not to say that we can't emit any carbon, because I'm sure you gents know there's about 6 billion people on the planet, 6.3 billion, and they maybe consume 3 barrels of oil in terms of their energy. And in us lot, on average, we're consuming 13. And as the 6 billion inevitably get richer, we can't hold them back and hold them in serfdom and say, no more. So we are going to continue to need hydrocarbons. Hydrocarbons are going to have to go through this increasingly small window of the ozone, if you will. So gas over coal. So I would say to you, I'm opposed to LNG because you use the facility of LNG, liquefying it, to transport it. But when you do that, everything that is entailed in doing that actually almost doubles the gas, the carbon footprint. And so you may as well just burn coal.
Yeah, it's almost a form of greenwashing. Like it's this.
It is. You're absolutely right. Forgive me for killing mosquitoes.
Those are some big mosquitoes. We only have the little ones here, but wow.
Well, the crack noises, believe me, I am ace at taking these things down. So they don't have the terminal capacity, and even on the others. So if you were to take it out of the US, even then you need to get it to the terminal by the coast. Even then, the amount of capital you've got to put in requires someone to sign a 20-year fixed contract, and no one's signing fixed contracts or anything to do with that because we've all gone a bit loony in terms of the environmental social governance pact just now. So that's a big problem. And so I've been looking at it saying, yeah, and there's an argument with Vlad the loony. He's like, NATO's on my doorstep. And that's just paranoia. It's on his doorstep because he keeps doing dumb stunts like this. But you can imagine the US would like Russia sitting in Cuba. So let's play that game. Of course, with his theatrics, NATO kind of saying that Trump was correct. Never a comfortable thing to say. I looked at it. NATO collectively spends $1.3 trillion on defense. And the presumption is that's going to rise 5, 6, 10-ish figures. So you're talking about like 100 to 150 billion. And my point is, I would spend 100 to 150 billion to take on one of the biggest engineering tasks ever taken on by mankind, which would be to build a Liberty gas pipeline. We keep hearing about Nord Stream. I'd bomb that thing. That thing would be subject to geological disturbances on the seabed, and it would be gone. Like, I would cut you. If I was running the world, and God help us, if I was running the world, I would say my European cousins are so weak-spined. They've got themselves into such a jam that at some point they're just gonna, they're gonna capsize. And so I take away the choice to submit to Vlad's gas. I would just take it out. Pipeline, boom, gone. That pipeline is 1,300 kilometers. We're 3,200 from Newfoundland to Ireland. There's some big, deep valley rifts in the Atlantic, but let's do it. And then what you need to do to move gas is you need pressure. You've got to move it from low pressure to high to low, and so you need pressure stations. Let's build a thing. It would be a more profound and elegant solution for NATO to say, you know what, you're right. It's an old way of thinking, it's an anachronistic way of thinking to believe that we should have tanks and missiles aimed at each other. Let's just build. We're going to build a NATO or a Liberty gas pipeline from the States to Europe, and you've just lost your superpower. You're the only superpower because you are, an appallingly corrupt, and it's a dictatorship. And the only power you have has been really the stupidity of European decision makers giving you that power. And at a stroke, even if it takes 10 years, the fact that, we're building it gives you an incentive to kind of smarten up. So anyway, that's what I've been thinking. Oh, so long meandering. Europe. So gas prices, I was looking at UK gas prices and converting back to the same metric as we use in North America. So if North America is trading $4.50, $4.60, it's $34, $35, $36 in Europe. I mean, that's a huge order of difference. And that ain't coming down like I try to intimidate, because there's no short-term fix. The only way that comes down is you just accept that you're going to take Vlad's gas, which just doesn't seem the right option. So it's going to remain that level. And so think of the strategic advantage that offers and bestows upon the US, first of all. Why would you be making nitrogen fertilizer in Europe? Nitrogen fertilizer is something which sells between $250 and $400 per ton. Shipping costs are like 20 to 40, which is, say, kind of immaterial. North America in India every year kind of puts to tender, hey, we're looking for X tons. That should just all go to the US. And crucially, gas is about half of electricity generation, both everywhere. Like we've pretty much taken coal out. What those price differentials mean in Europe is profound poverty, household poverty. And so what's happening is European governments cannot pass it on. European governments are therefore presently subsidizing it, again, with the naive supposition that in a year's time, the price is going to be lower. But when you look at the forward for next winter, guess what? It's been jacked up to this winter's price because there's no solution. So actually what they're going to discover is this temporary subsidy. The Italians, I think, have committed somewhere between 6 and 8 billion to keeping artificially the price back before where it was before the crisis. That's going to be in perpetuity. And if anything, the price is going to go up. So that kind of feels like helicopter money, which will be accelerating and will be going down. It's a wealth transfer, and it's like a wage payment on top of what you're being paid. And so if this long, epic bull market in sovereigns is to change, if yields are to rise, if inflation is finally to emerge, I suspect we might look back on this tragic theatre which is around us in Europe and look at gas, look at the importance of gas, look at the catastrophic vulnerability of Europe, and see that this is where it began. This is where the first true helicopter money began. But that's supposition on my part.
I recall,
Sorry.
I was just going to say, I recall, Hugh, that when Yeltsin was in power and he started this whole, birth of the oligarchs and opened up the markets in Russia, or started the process of opening up markets. The story of Putin was, of Vlad the Impaler was really interesting because, he rose through the ranks of Yeltsin's government by allowing them to believe that he was one of them, and that he was for the free market, and that he was for carrying on, the party line. And then as soon as he got into power, as soon as Yeltsin, faded into obscurity and passed away, and he was a drunk, and Putin came into power and almost immediately started to dismantle Yeltsin's work. It almost feels like he's done the same thing with Europe, where he has sort of lulled everybody into this, just buy our gas. It's cheap. We'll eventually build a pipeline and we'll supply you with an endless amount, and you have nothing to worry about. And they all fell for it. And now, we're at this, it's been a little while coming, but we're at this point where Europe is a hostage. He's literally being held hostage by Russia.
But it's not, I don't take issue with this kind of chameleon, I'll be what you want me to be until I seize power. But as early as 2007 is 15 years ago, there's the famous thing about when he was invited to, we created the G8. That silly Goldman Sachs guy, Jim O'Neill, created BRICS. Why did you have Russia? And that was so absurd. BRICS. Anyway, that's the squid for you. But and so BRICS and Russia, the G8 was created. And there's the famous and true story of the Putin and Sarkozy meeting, the French premier. Sarkozy was, kind of bright smile, full of charisma. And he was in with Vlad saying, hey, you gotta stop, you can't, c'est quoi, qu'est-ce qui se passe? Stop killing journalists. Stop, arrête with the killing journalists. And, and what's going on with your position with gay people and the war in Chechnya? Vlad, get a grip. And, so this all came about because Sarkozy hosted a press conference afterwards. And of course, the press conference was an hour late in commencing. So he began very ashen-faced and somber and kind of stumbling on words, not the usual Sarkozy. And he began with an apology, just saying, I was with Mr. Putin. People thought he'd been drinking shots of vodka. And the opposite was grotesque. The opposite was, after this, Putin sat like that. Or he sat like that. Mm-hmm. Or he sat like, growling at him. And when Sarkozy finished, he said nothing. There was just the most unbelievable pause, just as the tension got higher and higher and higher. And then Putin finally, and he did that kind of jiu-jitsu nonsense. And what he was trying to intimate was that his country is enormous and that France is really just an afterthought. And he said to Sarkozy, any more of that, and I will crush you and your little country. Okay? It's so we can continue on the basis that I can protect you, I can look after you, but I can absolutely destroy you. So we've known his true identity. The European heads of state have known his true identity, right? That meeting was a clarion wake-up call to commit to nuclear, to commit to other sources of pipeline gas other than Russia. That was 15 years ago. We would be very close to realizing it. And yet here we are with Vladimir breaking every rule because he knows presently in the context of Europe, he's invincible. And the point is, why stop with Ukraine? Ukraine's it's just another poor country like Russia. And what, are they going to nuke them? It's hey, as you say, the puzzle with Europe is, why is it not as dynamic and vigorous as the US? And actually, the missing part of the jigsaw is the energy component. It has no energy, right? And it just feels and that kind of just feels like a metaphor for Europe. Imagine plugging Europe in and kind of waking it up, and it would be kind of sexy and things, and they would kind of get an edge and an energy. They would get energy. Europe's like, plodding. It doesn't have that. The Rolling Stones were, making songs that, which, make you think about California, not the Autobahn. So you can imagine Putin going, well, these idiots haven't done it. Why don't I do it? Germany makes lots of cool things that the rest of the world owns. I'll just plug it into my gas network. Boom. The oligarchs, all my friends tell me that, that south coast down in France is super hot, super chic. Hey, why don't we take that as well? Who's going to stop me? So that's why they really have to, they just, they have to be very, very secure.
What do you think the source was to keep the European Union so docile and on what is, in retrospect, a very obvious track, and in some, sort of perverse irony, you now have, European countries subsidizing energy costs, which of course that subsidy is going to Russia in order for the funding of the invasion of Europe. Like what was what's the brain fart there that just kept them so docile for 15 years?
Yeah, completely been docile for 50 years, you know.
Yeah.
They were
Yeah.
rebuilt by
World War II.
they were rebuilt by the Marshall Plan. It was like, hey guys, let's pull, you know. I'm thinking like, you know, over there, you do this, you do this. And like, well, really? And it works. And I was like, oh, okay. Another thing, I mean, the Sarkozy story is 2007. And I'm saying it was 15 years ago. It's a long time ago. But obviously, it's months before the GFC, the Great Financial Crisis. And it doesn't get enough attention. Our world changed dramatically with 2008. I would say it was I don't know what to call it, a monetary regime, a world order, some kind of implicit contract that governs the relationship and the movement of capital between sovereigns. But what I'm referring to is the Eurodollar market, which is to say this enormous, almost like dark web conglomeration of private sector banks, which create dollars, which print money. You know, this mythical notion that the Fed has suddenly started fibbing and say, hey, we do that. You know, they were on TV in the height of the virus crisis, say, hey, we're printing money. You know, we've printed like, what was the statistic? We've printed something like a quarter of all the dollars ever in existence. Complete, I mean, fibs, lies, not true, but the Eurodollar system does it because they make loans. And when you make loans in dollars, you create dollars. And that system began in around about 1965, if not a little bit before, in London. And it lasted until 2008, I believe. And it hasn't been replaced, and it's lost. There's little desire within the Eurodollar system to print money, which is to say, to give out new credits. And for that reason, whilst GDP globally has surpassed the levels of 2007, we have not attained the trajectory of where we would be had we not had that crash and we had maintained the trend line in economic growth. And globally, that looks like $30 trillion. So the docile nature is that sovereign governments, with 2008, they went, oh, gee, 2008 and the near bankruptcy of the banking system actually felt, it was one of those events which seemed bigger than their ability collectively to respond. And so they felt, they're not used to that, which is why they went out kind of trying to get scapegoats. Oh, it's hedge fund fault. Well, actually it's not. And so they're desperate to be retained in office. That's harder when economic growth is modest at best. Again, if I keep to the French angle, I was living in Paris from 2018 to early 2020. What's he called? The present incumbent, Macron.
Mm-hmm.
Macron. He tried a laudable restructuring of the insanity of their public pension scheme, and kind of Thatcherite, but at the wrong time. And we had Gilly Johns and all the rest. Why was it the wrong time? He was trying to really bring crunching economic change, which would be very much short-term, vigorous pain for a lot of long-term gain. But he was doing it within an environment where French bank lending is growing at like 2 to 3%. It's just you're not creating enough prosperity. You come out with that kind of really tough stuff when everyone's doing well. You're like, hey, your house price is going up. You got a job. You're buying a second car. You're going to St. Bart's on holiday. let's talk about restructuring, you know, and they didn't get their timing right. So there's a little bit, the docility is that they've been on their asses, but with the economy just lacking an impulse.
Well, we're seeing that now, though, right? I mean, we're seeing certainly in the U.S., I don't know about in Europe, but certainly in the U.S., we're seeing exactly that environment that you're describing. We had a period of extremely vigorous economic growth. We had very positive consumer sentiment. Certainly a lot of that has sort of rolled over as we've seen inflation take hold a little bit over the last year. But, you know, you've got the market, what are we, 7-8% below all-time highs? You've got home prices up between 20 and 30% in a lot of metro areas in the US. Is this the type of environment, do you think, in the US where they could begin to introduce some of these structural changes that Macron was trying at the wrong time in France?
Well, except for that, whenever we get to one of these moments where we're entertaining the thought of escaping, you know, capturing that escape velocity to allow us to leave 2008 behind and attain that previous projectile of growth. Whenever we kind of get around those levels, the Fed comes in and starts talking nonsense. And, you know, like 30-year US mortgage rates, the jack up in the last 4 months was enormous. They've almost not quite double, but, you know, really, really large. And that's one of the hard issues. This whole notion, thankfully there's less of it, but, you know, when the Fed promoted and introduced quantitative easing in March 2009, you had celebrated, serious economists and historians saying that, you know, this was Weimar and Zimbabwe dollar, and the dollar was going to crash and all of this nonsense. Here we are, the dollar's 20-25% higher. So that a profound misunderstanding of how it operates. However, what I want to say is you can't make references to Weimar because there's never been a case of breakout inflation. I want to call it financial anarchy because it's not like 2-3%. It's really exploding inflation. You've never really observed it in democracies like ours, where and the principal difference being the sheer magnitude of the capital markets. So the stock size of capital markets versus the flow of GDP, whereby every time there is an inflation fear, given the sheer size of those markets and how they reprice, then the economy stops very, very quickly. So I'm not confident, to your point, that this would afford an opportunity to take on a lot of structural reforms.
How did we get so trapped? Because I mean, I feel in so many ways that we are trapped as a political system and as a global financial system. And I also want to touch on whether he sees this as well and whether he's chosen now as an especially convenient time to take this type of action. But how did we get so trapped such that the financial markets are now the tail that wags the economy dog, and that we have so few options about how to make structural changes to enhance long-term prosperity? And instead we have to keep taking steps that support capital markets in the short term and trade off against the type of investments and steps that would lead to greater long-term sustained prosperity.
Yeah. I mean, we're taking painkillers rather than medicine that would address the underlying causes, you know. Here we are talking about put down, but the people I hold responsible in terms of answering your question are the Chinese. which is a little bit unfair. It's not exclusively Chinese, the mercantilist system, but given the sheer size import of China and their relentless pursuit of mercantilism, I think it has taken away. I think let me say, it is the reason why we have failed to achieve escape speed velocity and attain that level of GDP, where we were heading to before the mess of 14 years ago. That China takes that away from us. And it does so because, why does it do it? It does so because we've got a dirty float. So the two largest, most kind of dynamic nations just now in the world, China and the US, and their affairs are governed by something which is determined in Beijing, which is to say the yuan cross rate with the US dollar. And that cross rate should be, were it not politically determined with their kind of closed capital account, etc., I would hazard a guess that rate would not be 632. There would be a lower figure, which is to infer that the renminbi would be stronger, and maybe it would be 5, maybe it would be 450, maybe it would be 430. Pick a number, because there would be a number which would kind of price in the great gains that they've enjoyed in productivity. But that's not happening. And that's a problem internally in China, because if the renminbi dollar was 430 rather than 630, then buying high tech or whatever US products would be more attainable to 400 extra million people. But it's not. And so they never attain the income levels that their productivity merits. Okay. And so they have to save more. So they're saving more rather than spending. I'm sure you're familiar with the statistic that consumption in China is just on another parallel universe to what we're accustomed to. It's about 20 points of GDP less. That's kind of why. And on the other side, we continue to hollow out societies around the world. Now it's middle class jobs, but they all go to China. Why? Because it boosts profits, right? And when you boost profits, guess what? Stock markets go higher. It's all kind of linked. And then if you're taking jobs out of the rest of the world, so if you're displaced and you lose your job, first thing you do is you raise your savings. You don't do it you don't sit down and plan it. It just happens automatically. You've got no less money coming in, and you've got discretionary spending non-discretionary spending that you have to meet. And so, that's what happens. So that's, I think, that's been like a handbrake that has taken away the traditional reaction to loose, lower, cheaper money. It may not as well have happened. It's just been an irrelevance with China sitting there. Now, I can see it coming to an end, but in a manner which I'm not sure helps any of us. I can see it coming to an end because the Chinese have made just a profound error in allowing a credit bubble on their watch to inflate Chinese property to a level where it's now greater than US property values. That's only ever happened one other time, which was at the end of the 1980s with Japan. Mm-hmm. Their stock of overvalued property is 4 times the flow of GDP. That is a profoundly vulnerable level. We've had COVID, and they have not, again, it's a kind of Russian-like, China gives you more prosperity, but it takes away your civil rights as much as Russia does. But that, something's going to happen with that. And so so what I was meaning to say was, and with their COVID response, it couldn't be, wrapped in, the American flag. It had to be, something that was derived from the fruits and endeavors of Chinese laboratories. And that stuff just hasn't worked. So Omicron came through with everyone kind of vaxxed up, and therefore allowed us to hit, I'm not a doctor, but I'm supposing it seemed to allow us to hit herd immunity. And the thing now kind of like feels like it's behind us. Whereas in China, they fear anything with the notion of herd immunity because they don't have the vax protection. So they're really, their economy is still shackled with those restrictions of zero COVID. The property market is seriously distressed. And more than that, this Eurodollar system, which truly creates money, is based on collateral. And there would have been hundreds of billions of kind of dollars being created out of thin air based on collateral values, based on Chinese property values. And that thing's all unwinding. And you don't see that it's not regular banks, it's all dark web stuff. So there's so much. And so that's what I keep coming back.
Hugh, it sounds like, like just listening to what you're saying, it sounds, like the pillars that are supporting the European economy are so easily, potentially being crippled by this Russian invasion and by this Russian sort of dominance over energy. And then, on our side of the world, we're at risk because of the Chinese and the way that they've gone about hollowing out our economy by offering cheaper labor and being uncompetitive in terms of the currency. And it looks like both of those command economies are threatening the Western world for one reason or another, right? Because maybe
Well, I'll push back a little bit on that. Yes, certainly.
It's a possibility. I'm not saying it's going to happen. And
no, I'm pushing back on the blame. I think we in the West had just as much to do with it.
Oh yeah, absolutely. Yeah.
In pursuit of shareholder value maximization, embraced globalization. We vendor financed Chinese growth on their mercantilist model. And we have seen, we're sort of at the asymptotic part of that dynamic at the moment. And as a result, we're seeing some of the cracks in that in the Chinese property market. But we're complicit because, at any given time, we could have opted for freedom and broader prosperity. And instead we opted for financialization and borrowing prosperity from the future in order to fund consumption in the present. We have at every point along the way made decisions that kicked every meaningful can down the road. And so that's why I want to sort of circle back to whether Putin, maybe almost certainly we're giving too much credit to Putin strategically here, but it does seem like the most extraordinarily opportunistic timing for him to engage in this way with oil inventories at, across the entire spectrum of crude products at 9-year lows, base metal inventories around the world at 5, 6, 7-year lows, and multiple CPI prints well above 5, 6% in the US, which puts the Fed potentially in a hard spot. It wouldn't take too many levers being pulled by Putin on the energy side to make the Fed and the ECB's policy decisions nearly impossible over the next 3 to 6 months. So, I'm curious whether you think that there is something there from a strategic standpoint, and how we might hedge some of those risks if in fact that is the case.
I mean, I enrage lots of people because I still such an advocate for, I think the US, I call the US a very benevolent empire, in that, it was attacked by Japan. It destroyed Japan in response, but then it rebuilt Japan. It really didn't want to get involved in Europe, but ultimately did the right thing and got involved in the Second World War, and then rebuilt the damn place. It kind of looked askance at the profound catastrophes on Chinese humanity by their various dictators. And when they finally kind of asked for help in the sense of being allowed to enter our world, the world trade system, we said yes. So America said yes, knowing that in the short term it would weaken America, knowing that jobs would be lost, but having the foresight to recognize that with richer neighbors, that pie expands more, and the richer you are, the kind of less bellicose you are. But obviously within all of those noble intentions, there's been massive screw ups, to say the least. In terms of Vladimir hitting at a very opportune time, the world feels like the 1970s. We have an energy crisis. Back then it was at OPEC. It was a political thing. It was essentially an act of war, an act of aggression, or it was brought on by the act of war. If you remember the Israeli war, with its
the Yom Kippur War.
Mm-hmm. You had Russia going rogue, and going into Afghanistan uninvited and against everyone's intention. You had the Iranians taking the American embassy hostage. And the mullahs, the mujahideen, were like, I don't know. I mean, I think it was a suicide mission. Like, we're really going to get our ass kicked here. You just don't take down embassies, certainly not American embassies. And we had Jimmy Carter in, and he went, Can we please negotiate? Can you bring them back? And they went, whoa, what? You mean you ain't kicking our fannies here? And you had 40 years of just escalation, which is so important that we don't, like, Biden is, who knows who he is. He's like the Wizard of Oz, but we have to hope that there's more stiff backbone, and that it's not, hey, please can you send our hostages back. It's like, we're bombing Nord Stream, right? We're building a pipeline. We are just cutting you out of you're despicable, and we shall see.
I think that's my point, right? That strategically, that is an action that they would take in different times, but because of the inflation situation, because of where rates are, because of where markets are in terms of the weighted average, like cap weighted average duration of the S&P, for example, can the central bank afford for rates to rise? Can they afford for five-year inflation expectations to rise? Can they afford for mortgage rates to rise more substantially? Maybe I'm wrong, but I feel like if they were to take the steps that are necessary to be firm against this type of action, that it would potentially cause a collateral cascade. And, we've had 12 years of action that shows that, the Fed and Western governments will let everything around them burn to preserve the value of the S&P and to ensure ever rising home prices. So do you think they have it in them? Do they have the backbone to take the steps that are necessary given the consequences? And maybe I'm overstating the consequences. So I'll
I think fair point. yes, do they have it within them? I don't. It's a bit like, the US ambassador being asked questions about, Putin just now. She's like, I don't know. I mean, the steps he's taking now are just beyond all rational kind of power broking. We don't know where we are with this guy now. So, but with that said, US has the biggest strategic stockpile of damn oil, like, in mankind. Okay, use it all, right? We have, our friends in the Middle East, right? Saudi. You know what? We are taking all support away from you guys if you are not pumping. There's no way the oil price has to rise. Shale oil in the US, they overproduce, and they're like, okay, we're being very disciplined. It's like, guys, back. Start producing like 24/7. Get the stuff out. The energy's there, right? It's there. It's whether you have that American hostage thing in Tehran. It's how you respond to it. It's there. If you got resolve, if you're aggressive, boy, could you, with the rest, basically the rest of OPEC is US friendly these days. It's like,
And you
guys,
got
have
the
no
potential for Iraq to come online too.
It's like,
So I think
it's funny because, like, with Carter, his hand, he was a sort of a weak hand in terms of how he dealt with the hostage situation. But did that have to do with the fact that the end of the Vietnam War came it ended so badly for America that there was such a strong anti-war sentiment that it crippled the ability to make that kind of policy decision, to say, we're going to go in there and we're going to bomb the hell out of the Iranians and we're going to take our hostages back? I mean, it took that Canadian film crew, that fake Canadian film crew, to help some of the hostages escape, right? And then within hours of Reagan taking the office, they were released, because suddenly the Iranians were, they weren't scared of deflated Jimmy Carter. They were scared of Reagan. There was also the back channel, but they were scared of what Reagan would do, because he was more of a hawk when it came to war.
Well, just the fact that Reagan got elected was a sign from the American people that things had changed. And, so part of this is crisis necessity change. When the crisis is large enough, the will to act will be there. And until it's large enough to suffer the consequences of an action, you'll continue on a road that is one where your response is muted. Granted, the response currently has probably been more than most expected. But I wonder, so we when we started, Hugh, you were talking about sort of these major forces that were coalescing. One was, yields going to zero. The other was the European theater and the energy policy in Europe. I wondered, and we've kind of touched on some others, the financialization of the economy, sort of the deglobalization and reshoring of supply lines. But what are there any other large scale sort of major pieces of this puzzle that you were going to share in building this sort of mosaic of what's going on?
I mean, like, just one thing I haven't touched upon, which is, this insistence that we say equities are in a bubble. And certainly when you look at market cap to GDP levels, that feels apt. But that's kind of like making the same error we did with quoting debt to GDP levels and saying, hey, or government deficit figures to GDP levels. If interest rates reset to zero, it kind of changes all of that function, So I really still push back when people tell me equities are in a bubble, because the majority, and when I say majority, always like something 90%, and I want to say much more than 90% of stocks and the major blue chip, what we used to call blue chip names, they traded price levels that prevailed in the 1990s. And indeed, this year, the S&P is only off 8% because most of them are up. And the ones that are down are what I call riskless stocks, which are deemed to be commercially devoid of risk, such as Apple. And if you're in an environment where you price the risk-free towards zero, there's rationally no outer limit of where the market cap of that stock should be, which is why it was the first to $1 trillion and then 2 trillion and 3 trillion. And so I think we got to be, that's why I can still understand where the market is, even in the face of the European hostilities. Back to that notion of, boy, have we really, is this actually strategically really great point for the Russians to strike, etc. It's like, I still think not really, because I mentioned China's, is slowing and has the risk of actually having a full-blown recession. Europe now, of course, has just hit a major speed bump, and the legacy will be higher gas prices. That's not a global phenomenon. That is, again, a regional phenomenon. And so in the States, that could translate itself into a profit transfer to large industrial sectors of the US. So US citizens will not be paying higher gas prices for their utility bills. The utility bills might be higher, but that will be a function of weather patterns and the like, and how much storage has been prepared for the season. And you can see how long-term rates go back into that kind of 2% being the cap and gravitate back to about 1%, and the stock market's going to be just more of the same. So that doesn't change. What the bad thing about all of that is that we have a generation without assets. And I'm tempted to kind of talk about the crypto thing. And I'm only tempted because there's very little I can say about it, except I have a curiosity in that, could it, because then I am talking about, we had the gold standard as a means of sovereign nations talking to each other with trade flows and a system for regimenting trade flows, which was the gold system and the actual physical transfer of gold. And then gold itself was high-powered money, which would create credit in parts of the world, and it would take high-powered money away from parts of the world. And that system failed. It failed spectacularly at the end of the 1920s. It was replaced by Bretton Woods, and then Bretton Woods was replaced by the Eurodollar standard, and Eurodollar standard blew up, 15 years ago. There's something out there, and it's getting closer to us, which will be this, what I'd call a fourth turning point contractually in the sovereign affairs of the world. When you go speculating, trying to find a system, it needs to create it. And I think we were talking about Vladimir coming to power under Yeltsin, and again there was a bit of Reaganism, Thatcherism, whereby there was a voucher-based economy. And I think this is kind of where I want to kind of leap, is we kind of need something of a voucher-based. Now, voucher, of course, can be used interchangeably with token. You know where I'm going with that,
Right.
with the NFTs and stuff. And it all sounds ridiculous just now. But, before the chaos or amidst the chaos of a liberated, Russian Federation, they went round the doors and they gave you a certificate. Hey, you put up with all that crazy stuff for 80 years, but actually, did you know that you own a bit of the post office, you own a bit of the energy company, you own a bit of the bank, and here's certificates. And of course, the problem was people weren't educated. When the UK did that, between 1980 and 1986, I want to say, they spent tens of millions of dollars on advertising campaigns to ordinary people. And my parents were one of the ordinary people. My father was a truck driver, saying, "Hey, this is a good thing. This is really valuable. Keep with it." They didn't do that in Russia, which was a mistake. And the oligarchs then kind of seized it. This happened in all those, even the satellite, the Czech Republic. The billionaire guys just went around buying them all. And so and that was the problem. Those countries got into a mess and then embraced these hard guys again because they didn't have this asset. They weren't enriched by the change. The change just meant just more chaos. And they're like, at least the trains ran on time, that kind of silly fascist kind of thing. And if we're not careful, we're going to get there. So again, I want to try and seize two kind of issues, the global warming thing, this whole carbon thing. And let's talk about how and of course we could do NFTs and we could do the metaverse, but let's kind of do it within carbon. So Europe has after 20 years of trying and failing and trying and failing and trying. I mean, they really did persist, and they're to be congratulated for persisting. So we're giving European policymakers a hard time. Now let's congratulate them. Their carbon permitting scheme works, and it's now we've got price discovery, and the price is going up. And so we are in the throes of creating scarcity with regard to the depletion of the ozone. So that's great. And other countries should just copy it. I don't know why they're not. They should just copy it. It works. But within that, and it's not given mention, is that in setting it up in over 20 years, but you could see almost $1 trillion of subsidy was given to European industrial companies, in the sense that there are, heavens, what are they called? Well, anyway, for those 20 years, all of those industrial companies caught under that regulatory and permitting umbrella were given never a dull moment. They were given free permits, free rights to pollute. And now the system's beginning to work because they are withdrawing those permits, and speculators like us are actually in withdrawing them, seeking profit as well. And so the system's getting tight. But in order to prevent too much like rapid and crunching and disruptive change, arguably like what happened with Yeltsin, they were very benevolent and patient, and they basically gave these tokens to the corporate sector. And it's only now, having transferred $1 trillion, they're going, look, we've been patient with you, we've given you something really valuable. Now we're telling you time's up, and we're going to, you're really going to have to change your practices. So my point being, why don't we do that? So if we wish to solve for the carbon problem globally, we're only going to do it if we can bring ordinary folk into the equation, where they own the problem and where they can do something about the problem, and where there's a reward for them doing something about the problem. And it dovetails nicely with this whole, hey, at the same time, we create assets for people who might not have assets. Okay. And so my point would be, we can easily determine the carbon footprint of your average household, and you basically give, say, 5 years worth of permits or tokens to each household for free. It's a form of quantitative easing. Now, it really would be money creation. It would be very, very effective. And you say to them, listen, we're going to give you another 3 years of a pass where we're going to keep issuing you for the next 3 years. So we're giving you 5, a legacy 5, and we're going to give you another 3 years. So you've got 8 years of these tokens, which would amount to several $1,000s per household. And then you're going to say, but from now on, we're actually, you do a tax return. We're going to insist that you do a carbon return. Now you can pay for your carbon tax by giving us back those tokens that we gave, and it costs you nothing. Or actually, you could try and shrink and reduce your carbon consumption, whereby you retain more of those permits. And let me tell you, those permits are only going up in value. That's imaginative. That's something that we could take on. It's mind blowing.
So is that at the citizen level or is that the household level? Just to be, I really think it's an interesting concept, but so are we giving these credits to non-homeowners as well? Or is it only to homeowners to incentivize a reduction in?
Yeah, it would have to be at the citizen level, wouldn't it? I guess.
Yeah.
For sure. You're taxed at the citizen level, not the household level. So, I'm kind of throwing things up in the air. I'm a provocateur of ideas. But you can kind of, it wouldn't be that hard, we just kind of roughly estimate the carbon footprint, and you book an airline ticket, you do it with the airline has to record that you took that journey, and so that's your carbon footprint, and it gets, so yes, you're creating another internal revenue service for doing this stuff, but so that's something. I'm still really attracted to the NFT and the Metaverse thing, and I think our generation, we're still really poo-pooing it. And we're like, oh, it's blinking nonsense. What? Someone spent $2,000 on a pair of virtual sneakers. You guys are all crazy. And it's like, but for 15 years, we've created an economy that's out of reach for the many, especially the young. It's just unattainable. And so it's no surprise that they are recreating our world in a manner that they can afford it. And you ally that to once you create a parallel system and it's creating assets, the crypto was clever because it had speculation at its heart, which encouraged adoption. Again, make people rich, and like, I love it. Give me more. Again, that's Thatcherism worked because my parents were allowed to buy the housing stock, the public housing stock. They were able to buy it below market and then enjoy the uplift. And sure enough, my parents were always decorating. I mean, here I am decorating in St. Bartholomew, but they were always decorating. They had pride in the house. That was the whole political imperative. Again, Russia's in the place where it is because it missed that leap because, the robber barons robbed the people and they took away that ownership. And so we need every bright head in the world is devoting all of their energy to the digital enterprise because it's really the only way they're going to create assets. And then with assets, who cares? Actually, let Apple go to $4 or $5 trillion. Let the 10-year bond yield sit at 20 basis points. Let it go negative, because the problem with all of that just now is it only benefits kind of us. But if you've created this huge meta, this alternative plane, and it's pushing them all up as well, then the digital will feed back. So once there was a great article in the Financial Times at the weekend on, sure, not great, it was okay, but it was on. There was the bankruptcy of Forever 21, which was a kind of, I'm less familiar with that brand, but I imagine that as being like Yara, delivery cheap product.
It's a teen brand.
Yeah,
I'm very familiar having having had two teenage daughters. I have supported Forever 21. I can't believe they're out of business.
Well, they're back in business, baby.
Oh, they're back in business. All right.
Reorganized.
They're on the Metaverse.
Yeah.
Yeah.
Oh, okay.
Designed a store. Their best-selling item. They won't tell you how many, but they reckon like they've sold over 1 million black beanie hats, digital things, and then when they hit a certain level, they're going to then sell them physically because they've become such a riot success online. And then I'm looking to explore that. I want, there's a financial motive for me, but there's also a give back notion of creating a tribe, being the tribal leader and seeking to create assets that the tribe own. and are free to trade. My point, I'm always rambling and forgive me, but when I hit my space, my rhetoric is pretty hot, and there's so many bozos on the internet with like 300, 400,000 subscribers more talking about finance, and they're bozos. And I'm sitting there at 9,000. I'm releasing a book this year, and I've got various media projects. What if I'm actually 500,000? I'm 45,000 on Twitter. What if I'm 500,000? And what if you've actually subscribed to my tribe now via a token? Got to think that's your speculation, your pioneering status is going to be rewarded by what I do to try and lift my profile. So again, these are kind of positive things. So crypto, the worst thing about crypto is I spend my life pricing things. Show me anything and I'll price it. Show me Bitcoin and the derivatives, and like, where is it today? Is it 38,000? Okay. For me, and it's failed twice, 70,000. For me, it could be trading back at 20 or 15,000 or 10,000. Equally, it could trade 100. If it does 100, it could double. But how much of my wealth do I want to denominate in something where the wides of my imagination are so stark? I mean, that doesn't exist in the dollar. So for all the dollar's issues, I'm very happy, very happy. I'm tolerant of denominating wealth in dollars or euros, but not crypto. And so we can kind of get into a lost line trap there. But the first modern money was Renaissance Italy, 14th century, I want to say, the Medicis and the like. And that was, and of course, remember, that was in response to the failure to find and profitably transfer silver from South America into Europe. And so you'd had 100 years of depression, which created the need for a new system, which was an open ledger accountancy system. It was a T balance sheet. You're on this side and you get credit and da. That's what crypto's doing digitally. Another interesting thing is that depression is a word that has vanished. It's an old-fashioned word. It doesn't feature in newspapers. I remember being interviewed on CNBC by what was she called? Maria Butter.
Bartiromo? That is going back.
That is going back. I just come off a flight from JFK, and I was on the floor of the New York Stock Exchange, and my wife was with me, and my wife was with the hairdressing, whatever, the makeup. And I said, depression, without thinking about it. And the hairdresser girl went, "Oh, he said the word you're not allowed to say." And it's funny that why I can't recall the last time I saw the word depression in a newspaper. I would say we've been in a depression is when you have not reattained the previous growth in prosperity. We failed that. And I've mentioned culprits. I've said China is sand in our system. There are many other culprits, I'm sure of it. Do we need 100 years before we change? I think change accelerates.
But it's a strange thing, right, Hugh? Because how do you measure prosperity, right? I mean, if you measure it using the ruler that many average citizens measure it in, they're seeing their 401ks at or near all-time highs, their home prices at or near all-time highs or up by 20, 30% year over year. They're feeling rich. So, I mean, I agree with you. I would sort of define prosperity as achieving a level of innovation or productivity growth, right? But that's not what we have been striving for, and that's not how we've been measuring prosperity. at least 10 years, at least since 2007. So I guess I'm curious, how are you defining prosperity? Because I think it must be a little bit different than how many people would define it.
But I want to say that you are describing as a subsector, a fortunate subsector of society. I want to say that you're defining an age group of society. And I think all of the very positive, but all of the prosperity ideas that you allude to are being captured by people like no one below their 40s has captured that. Unless they've traded crypto in the last 10 years, and that's why they've got this religion for the thing. And of course, prosperity is not share prices going up. Prosperity is that innovation. We live in an innovative time, but we live in a. I don't know if I'm allowed to say this, but can you say that the form of the return on innovation when it's a platform is that the returns all go to the winner, that it's just not shared. Like, Facebook goes from nothing to $1 trillion, boom. Or, likewise Google, etc. That they don't spawn, we used to have, innovation used to be moving from canals to railroads, but you would have 20, 30, too many railroads before ultimately you had 4. The innovation that we've seen since the NASDAQ bubble and crash has been a winner takes all. It's like one iteration, and you don't bring on competition. You own it, and you don't own it in Mississippi. You own it across the world, globally.
They buy your competition because there's such cheap cost of capital, such high margins, because their profitability is dominated by Metcalfe's law, and network effects, right? So
network effects. Yeah.
Yep.
But I have to say, I feel like when I look at, I'm fascinated when you can buy major corporate names at the same price as prevailed 25 years ago. I feel like we got that behind, I'm glad I didn't feel like that 25 years ago, because by now I'd be like, I hate these dumb things. They never go up. And there's something. So I get it. I'm a time investor. I mean, fantasy, made up, stupid, whatever, investor, but I'm a time investor. The time is the evolution of time, and what happens with the passage of time is something that fascinates me. The fact that the Dow peaked in 29 and it took 25 years to surpass the nominal price high. The fact that it repeated that in the 60s to 82, I think you've got to define it more in real terms, but it was a kind of 25-year window. With the 25-year thing, I even had the audacity to buy one touch 40,000 strike options on the Nikkei, and I think I did that in heaven. So let's work this out. So it peaked. I did that in 2007, 2008, because I guess I was expecting 25 years would be 2015, and so I had some time. Got to 2015. I don't think we've seen 40,000 yet. That was broke. But that time frame is coinciding. It's you typically have somewhere around 25 years as when you get into your maximum income generation, where you're accumulating savings. They're going into the stock market. They're building into the nest egg. That your house that you bought 25 years ago has gone up like 2x, but over a duration of 25 years. And so when I see stocks that have done nothing for 25 years, it begs answers.
So these are the sort of core industrials. Are you talking about sort of the Exxon Mobils, the Procter Gambles? And I know you don't have to give us any specific names, but sort of maybe industries. what industries are dominated by?
Yeah. Yeah, it would be mostly cyclical. You said Procter and Gamble. Procter and Gamble gets caught up a little bit in being commercially riskless. You see, because we went through COVID, where you had just the most immediate and most dramatic and biggest drop in economic activity in history. It was a great observatory tower. Revealed businesses, the true nature of businesses. So Apple business was intact. McDonald's profits were flat at worst, arguably high. It was a treat to go to the drive-in. You could go in the drive-in remote and go home. Procter and Gamble, you ordered, blah blah blah. So, that's why there's maybe 10% of the market kind of still. Facebook was deemed to be riskless. It's dropped 50%. PayPal was deemed to be riskless. It's dropped 60%. But I have to say, I'd be buyers of those things. I mean, without knowing much and without having the poop wish to jump into bed with Zuckerberg and the like. But when I've had 50, 60% decline on the trends that they were showing, and when it's so immediate, anyone who traded NASDAQ between 1998, 99, 2000, 50% pullbacks were common. They were almost like the springs, which then propelled you into the absurdity of an even higher high. And I have to say that if the Russian thing, there's a macro reset going on just now, it predates the Russian and European energy thing, and it was the fact that we were seeing 40-year highs in inflation prints, which was encouraging the Fed to talk to the near certainty that it was going to raise rates. And of course, this almost I think one could say unprecedented, that the whole shape of the sovereign bond curve flattening. Dramatic. I mean, almost very rarely does the 2-10 spread go to zero, but it was getting down to about 36 basis points or so, and they hadn't even hiked rates.
The market's doing it all.
It's doing it all. There's no secret to the names. I'm just Ford. That electric F1 truck, that's a mean machine. People want that. Just got to be able to make the damn thing in volume. But you look at that price. I want to say Boeing, but Boeing is very, very particular. Boeing had the mother of all glitches, obviously, with that disastrous introduction.
Now it's all over Netflix.
Yes, it was. And believe me, that so I developed property in St. Bart's, and I'm asset rich, but not very cash flow rich. So I don't really swing around in the market. But Boeing is this. The story of the glitch. The glitch is the greatest thing ever for investors. We've spoken a lot about Vladimir and stuff. Let's talk about kind of making money. The glitch is you live for a glitch. The glitch that I had, I remember having the Horns Reef fiasco. That was the great glitch of my career, and it fell upon Vestas, a Danish wind turbine manufacturer, and they committed to this project, and it got a lot of hype. I can't remember the details now, but cost inflation, it was just a disaster. Or maybe they cited it where there was no wind, but I don't think it was that. They were just, the technology was innovative, the cost delivery, and the price collapsed. 80% of price collapse. Boom, unforgiving market, because it had been a go-go stock. It was rated, and then they had a glitch. If you can own, which is to say, if you can understand that it's a glitch, which would, this is the Warren Buffett 1960s American Express, when they were a conglomerate, and they ended up with an investment in olive oil, Italian olive oil, and there was a great scandal because it got tainted and it was poisonous, and American Express was on its ass because they were clearly killing people, and you could look at it and you could try and kind of You could take the now out of tomorrow and see that you had to, that it would survive and it would engage this. And so Boeing, the price devastation, which is correct because it was a leveraged entity, but the price devastation is there. The glitch nature, I feel comfortable with the glitch nature because in 10 years' time, in 20 years' time, it's still going to be Boeing and it's going to be Airbus, and the American government has demonstrated they might be idiots in terms of whoever was responsible for that introduction. Pretty much they've all been cleared out. And that business will heal itself. And very rarely are you given the opportunity to buy something, which for sure will be with us in 25 years' time, and for sure will be either the dominant or the oligopoly supplier of aircraft. And in a world where every financial asset has been inflated to kingdom come by the Fed's supposed printing press, well, actually, Boeing is an opportunity. But it's literally something you commit to without looking at. It's something, you might as well put it on Elon Musk's first rocket to Mars and ask that. And then if it ever gets back, then look up the price of Boeing. But I'm pretty sure the price of Boeing would be like, 6x what you paid. I mean, I'm not recommending Boeing, but I'm recommending a kind of way of thinking. Contrast that with IBM. IBM was the Apple of its day. And when I say of its day, I mean in the late 20s. It was back then. If you had bought the perfect vision, if you had bought IBM at its absolute low, it's a bit like if you had bought Amazon. Amazon fell from 115 in the NASDAQ crash of March 2002. It fell from something like 115 to 8. I mean, wow. So if you'd bought IBM at the equivalent in the route of 29 to 32, and if you'd held on and you sold it when the Dow reclaimed that nominal or pierced the previous nominal high in 1954, your compound growth rate would be 10% per annum, which is good, but that's not the rate that turns you into a legend. Yeah. It's not, and that's you had perfect vision. You bought it at the absolute bottom and you're selling it now with the market right back at its high. Okay. Why? Because it never had a glitch. There wasn't a point where investors were terrified or disgusted, both with the company and probably more so with themselves for being so silly to swallow the hype. Those are the opportunities that I always look for. And talking of which, gold had something of this going into the events of this year, in that gold peaked in August 2020. I think I'm right in saying it was August 2020. It wasn't 21 years, it was August 2020. And then everything else just kept going. And gold went, gold, you're making me old. And like a month ago, no price gaps, like no, a lot of people, it sounds superstitious when you talk about price gaps, but price gaps reveal moments of emotion where there was a news event before the market opened and the market's been unable to clear every point. It's just went boom, high, or boom, get me out. And I always believe that periodic macro resets go back and fill gaps. And so something like Facebook had a gap just below $200, but you'd have needed a magnifying glass on the chart when it was trading at 430. And if you saw it, you'd be like, nah, forget it. It's never going down. So gold was into, of course, it then gapped on Thursday or Friday with the invasion. And so guess what? It's been coming back down. And I don't wish to bore you on gaps. I think if this macro reset were to be more meaningful, just now markets went, oh, and then and continue buying. But if it was to be more meaningful, I would look at the zeitgeist stock, Apple, and I would need to see some mean reversion in Apple, some serious mean reversion. And one of the tools I look at for no evident scientific reason, but I like 20-month and 40-month moving averages. They're slow. It's the kind of wisdom of the tortoise versus the hair of today and and why can't Apple trade at its 20, which is the average price of the last 18 months? But that would be 130 and today it's like 167 or something. So that would feel like they've taken out some more of the risk in the marketplace. And that's random thoughts from an island which is becoming dark behind me.
Well, this is
The chart.
this is for Canadians, right? And Canadians are, by their nature, often pretty obsessed with stuff like gold and oil, and so maybe we can wrap up with some thought. You already sort of mentioned gold, but you didn't really give your thoughts on where it might be headed or what some catalysts might be. Maybe talk about gold, and I'd love to hear your thoughts on rates.
Absolutely. Yeah.
Okay. So, in the summer of 2020, I published a paper. I'd been in a man cave, and then I started to come back onto these platforms, and I called it the dawn of chaos. And again, it was a speculation about we've had four decades of rates just going down. Surely we must let's speculate on the reverse and how that would happen. And so I then played with the notion that not only is inflation a monetary phenomenon, but I believe it has a psychological component, which I tried to discuss, and that actually what gets lost when we look at Weimar was Germany after the war was a society very, very divided between North and South, between Protestants and whatever. So many schisms, and really things really kicked off. There was a politician that could have been a unifying character in that tragedy, and he was assassinated. In terms of their economic policy, their economic policy reminds me a little bit of where China is. Germany, and again, I could spend too much time because you had reparations, which was, hey, transfer 50% of your GDP in terms of gold, boom. And gold on a gold standard was high-powered money. So actually, you were imposing decades. You were saying you're going to be a serf to the Allied victories because we're going to deny you the ability to grow. And so you can see how the Germans went, well, we are the powerhouse when the rest of the world grows. They need our innovation. We build the machines that, so why do we know it's coming? We've had this atrocious war. We can spend big on the public sector and infrastructure projects because we'll be able to pay for it as the world checks in and prosperity reemerges. And what they missed was the depression of 1920 and 1921, which people forget about, which denied them the opportunity to get that huge lift. And I feel China's a little bit like that with, it's really, it massively, it entertained the property bubble after 2008 as a means to maintaining GDP growth targets, which keep the CCP party legitimate. And it could keep those growth rates, which were being threatened by the silent depression in the rest of the world. And so you can see a point where that just breaks. Anyway, gold. So the idea of chaos, the decade of the 70s we touched on was chaotic. And we talked about what happens with chaos. You get energy crisis, you get sovereigns invading other countries, these things are now happening. You saw gold's initial reaction, and that was coming from a level where gold was like no hype, no expectation, no ownership. And so as a disclaimer, for no particular reason, but I ended up with almost like a silent trust, which is crammed full of gold and silver, ETFs and junior mining things. And thankfully I don't really look at it. And so I do look at it, because I'm not lying. I look at it every day.
You don't do anything about it when you look at it, though.
If I was allowed to do anything, I'd have sold everything about 2 months ago. I'd have
Read-only access.
yeah. So I think more and more chaos is chaos. The genie of chaos is written large. The tragedy of the US, where it feels, when people tell me, when I read history books and they tell me Germany was a divided nation, America feels like a divided nation, which is only getting more divided. When you've got commentators. Did you see the thing where there was a right wing, I mean, not an extreme, a Republican convention, and the audience were chanting, Putin, Putin, Putin. I mean, whoa, where are we? And so chaos is out of the bottle, and the only asset you're not going to like me saying this, gold is stupid waste of time. It's just dumb shit, but that's why when society becomes disorderly, the dumbest asset becomes the thing you need to, it becomes the talisman, it becomes iconic. Just now with order in the Fed we trust, forget that baloney, that's going to change. Wait till you think these guys are complete jerks. You're going to change your icons, and it's going to be gold until order is reimposed. Like you say, until Jimmy Carter is kicked out and a new regime comes in. And I give Jimmy a hard time. I think I'm right in saying that it was Carter that appointed
Volcker.
Yeah. I'm pretty sure Reagan wanted to get rid of him.
Yeah.
And both actually are to be credited, because Jamie could have probably did appoint him, but the new president would have been easily within his rights, to get rid of him, and didn't. So, but it was society will have to reach a stage where it's like, okay, enough with the chaos. Okay, give me sensible people. Just now it's going, hey, let's try Trump. Who knows? Hey, that didn't work. Let's try this really old guy that we don't even know if he's alive, Biden. And I went, okay, that's not really working. Let's keep spinning. We're in a spin the bottle society. That's good for gold. So that's good. You asked me about rates.
Yeah.
Rates the only engaging thing I can say. And my point is not to try and convert people. My system was always, again, cult-like. I was seeking a contentious posture that could go on and become accepted as the prevailing belief system, right? And that's how I'd seek to make money. So, and then one of my cult is one of absurdity, and I pursue creativity over logic. That was always my aim. Our industry does logic, and just assumes creativity. You have to work at creativity. There's a creative part of the brain. There are trigger points, so you have to work at it. That's what I do. And so I always say, hey, listen, if just about every logical big investor believes bonds are busted, bonds are overvalued because of the Fed, because of quantitative easing, that we have inflation, it's not going away, and bonds are busted. And I just want to say to people, so I want to, again, use the language of what I wrote in 2006. In January 2006 to my clients, I said, if you think the future is inflationary, if you think gold's going to $3,000, and back then gold would have been I want to say gold was about $750. I tell you, to reach that promised land today, you should own 10-year treasuries. And it's like the power of paradoxical thinking. And what I was saying is, you need a profound deflationary event to empower, embolden, to create a revolution in monetary affairs of central banks before you could get that escape speed to hit those price levels. And so if we're going to have a profound deflation, which changes their behavior, then you got to own the duration asset. And that came to pass. So let's deal with things we know. So let's not speculate. We know that 10-year treasuries peaked at 16%. I want to say July 1982. And if you go, and that's such a long time ago that it's we're deadened to the fact that the Federal Reserve had raised interest rates into almost the deepest GDP contraction since the Second World War. It deadens you to the logic that by 1982, inflation was well under control. Every month it was coming in lower and lower and lower and lower. But the conscious mind of the many was still conscious of what had happened in the 70s and was therefore intolerant of change. And I gave this example of Michael Steinhardt, who, as a brilliant genius manager, was buying treasuries and losing money because he was early, and he was being sued by his clients for style drift. So, to my mind, 16% in the face of pure logic, which says you got to be buying, and yet people were suing Michael Steinhardt, tells me that turning points are defined by something absurd. And so that was absurd then. And so for me, I would speculate that perhaps we persist in seeing inflationary prints, that they don't go away, that they persist. And despite that, Treasury bond yields could go back to 40 basis points, if not below. And that would be the absurdity that would tell me, right, now is the time. Do I really care about that? I don't know, because at 2%, okay, 2 to 0.4 depends how many bonds you make, but how leveraged you are for the return. But I do think, regardless of that, I think you will probably get to those levels. I think the catalyst for those levels will be a profound economic weakness out of China that people will put aside, that their fears for the print in inflation, for, oh my God, what's happening in China. I fear that China will respond in a way that Taiwan did in the Asian tiger crisis. So in 1997, Taiwan, despite having no foreign denominated debt, despite running current account surpluses, trade surpluses, it devalued its currency by 20%. It was it was Dadaism. It was an act of kind of defiance against economic logic, but it was like, hey, look, if all the brothers are going down, we will not give them the unfair advantage. We're going to take our currency down as well. And I think a 20% devaluation of the renminbi is exactly the wrong thing. I mean, but the problem with the world is the renminbi should be 20%, if not 40% more valued highly. But if their economy begins to unravel a bit, I think we'll just go.
So we get a deflationary shock there that precipitates an inflationary shock.
Yeah. So that's all I'm doing is I'm trying to create cartoon pictures which may unlock some creativity in everyone's logical minds, to try and to be aware of what creative people are thinking and doing.
Love it.
Yeah, it's definitely the exogenous shocks that we're not, usually paying attention to, right? It's the surprise around the corner.
It's the page 16 story.
Yeah. Well, Hugh,
who would have thought about it? Who would have thought that could happen?
who'd have-
No,
That
you're
was
right. back in
my franchise was.
back in 2010 or 2011.
we're so busy looking inward, right? We don't see that this country across the Pacific is actually so connected with our system and with our consumption and our way of life, and so many different aspects that and how it could actually have that kind of an impact. I think people were looking at the Evergrande situation. It hasn't really affected us. It's just a canary in a coal mine, though, perhaps, right?
Yeah, again, it's investors. You have to do two things. You have to marry creativity with logic. And so the creativity is assigning yourself that task every now and again. What is the most absurd and the most unlikely thing that could happen? For most people just now, it would be treasuries going back to 0.4. That it just seems really hard to conceive, or treasuries going zero or going negative. That really hard to conceive of that happening. So you should sit down with a blank paper and say, well, how would that happen, and then work back to the present. Maybe you might still conclude that it's not going to happen, but the conjecture that you've unleashed in your mind, and the kind of alternative paths that we might have to undertake, you become more conscious of that and better equipped to deal with
The
those.
scenario analysis. Actually, Annie Duke talks about that in some of the decision making and creativity around decision makings and the implications of decisions and the counterfactual and all that sort of stuff, where you're pursuing those creative endeavors to understand the global situation more fully, with all the ramifications beyond your expectations, obviously, the absurdities. So it's
And I get an open pass on that. I'm allowed to be absurd. I'm allowed to be silly. I live a silly life,
Encouraged, actually.
Yeah. I think it's part of your brand.
It is.
Absolutely.
It is my
Without a doubt.
It is my thing.
Well, speaking of your brand, you've been so kind with your time. I'm pretty sure we're getting close to wrapping up. I also, there's a couple of things. You mentioned a book, so it's coming out. Can you give us a little teaser on, just to get the buzz going for what it's about, or what the topic of conversation will be? Or
Oh, I mean, hey, I'm a guy. Ask girls what's the worst thing about guys. They want to talk about themselves all the time. It's all about me. All about me, baby.
I love it.
It's pitched as a celeb memoir. This is not how to get rich trading stocks. Okay, this is I came from a housing project with crime and whatever, and I ended up in this billionaire paradise of St. Bart's, A to B, and then the scrapes, the events,
Trials and tribulations.
a bit of Wolf of Wall Street, like when he discusses going to United Banque Privé in Geneva, and he describes the foyer, and I'd been there, that book resonated. I'd been there, I'd seen that, I'd done all that. I hadn't done the loops, but there's many a tale, but it got rejected by the Schwager publisher. Like, we only do finance books. I was like, oh, thank God. This is not fun. But you will,
Yeah.
this finance embeds it because it's my engagement with finances. The voices in my head. I've always played with the notion of being a paranoid schizophrenic. Maybe I am, but I could, being a chart whisperer, I could conceive of stories and conjecture would come out of charts, and then I would insist on taking positions, and position size would be determined by the amount of research and ownership that we could really take on, and understanding and assigning probabilities would determine. But we would, even with I always wanted to have a tiniest little position, a bit like Jesse Livermore. There's nothing like ownership to, again, attack the neurons in the brain and get them kind of whizzing in a different cycle. So it's all of that. In terms of when, I mean, who knows? I've got my Hollywood editor, I've got my Hollywood agent. We're trying to kind of hook it all up together. But the book's done, and it's going to be out by the end of the year.
Is the Rock cast as the lead role in the movie rights?
Oh,
I'm just looking at your
It looks
fitness
just
level
like
these days. Yeah. And maybe he's a little heavy, but
Brad Pitt might be
Well,
better.
yeah, Brad Pitt's better. You're right. That's
yeah, give it a bit of Brad Pitt.
You're right. You're better. So the other thing I do want to ask you is you talk about your place in Bart's a lot, but what's the name of it? What's the website? Where can people go and book their flight and get out to see you? I'm sure it's it has a certain people can make their own cost decisions, but people who are listening this can probably afford it. So tell us a bit about the Project Bart and what it's called and all that stuff.
Well, thank you. That's kind. It's Blanc Bleu. So even our American cousins they kind of get Blanc Bleu as blue white. Blue and white it is is Ralph Lauren. It's like a Ralph Lauren picture board of a shack by the sea, and that's the emotion. I really that my clients are rich. One of my projects maybe for tomorrow is I've got this swimming pool under construction for the next project. And is it what? How would I say soak the rich? Would that be tromper the riche? The riche? How would I say that in French?
Yeah, that's pretty close. I think tromper les riches.
Yeah. And so I'm going to get a spray can, and I'm going to write that on the cement of the swimming pool, and rich people are going to come and pay a lot of money to stay here. But it's Blanc Bleu. I'm trying to create a brand. So Blanc, and we're building Blanc Bleu too, which is Blanc. So we have Blanc Bleu Original and Blanc Bleu Privé. I hope to have Blanc Bleu, La Plage, Blanc Bleu La Falaise, that kind of thing.
Yep.
And it's Blanc Bleu St. Bart's. It should come up. If you go to hughhendry.com, there's a way of hitting that site. So that's truly, this is a tiny island. So it's a bit like your crypto thing with the 21 million units that they can't build any more St. Bars. You have a reverse engineering where the building permits are getting tougher and tougher and tougher. So the house that I built and completed in 2015, I even with the same footprint, I'm not allowed to do the same. I can build less and less. So that's in a world, presumably, where money is still going to be widely available because we have all these issues and confrontations. And you saw what happened to the euro. If the euro goes to parity, which I think is a possibility, the dollar, then St. Bart's property prices just got 10% cheaper, and our customer base are Americans. I'm pricing in dollars, and my expenses are in euros. So I gave a lot of consideration to being in St. Bart's. But Blanc Bleu, please check out Blanc Bleu.
Will do.
You're seeing.
Well, I
But
have
it
to
costs a fortune.
something personal.
Awesome.
Yeah, no, I figured so. I'm going to save up. And then lastly,
Where can they find you?
where can everyone find you on your building your social tribe?
So Hugh Hendry Official is, would you believe I have an Instagram? Spent too much time on my Instagram account showing pictures of guitars and cars but quotes and thinking and charts and the like. Twitter's where I should be, where you find me, Hendry_Hugh. And we have fun there. And I'm trying to recreate, again, being the cult. So, I was the cult leader with my hedge fund. I would be detached from my team. I'd listen to music. I'd look at charts. And then I have light bulb moments, and I'd come out. And the one thing when you've had inspiration, the one thing you desire more than anything else is to share it with other people that you respect, and have them either confirm or chip away and send you back. And I've discovered that with Twitter, it's like I have this new team. I drank way too much tequila on Friday night, and I had some friends staying who don't normally stay on the island, and so I missed my publishing deadline. I wake up the next day, my head is pounding, and I'd yet to finish these calculations for changing like British gas in their thermal unit per price and sterling, and change that into a Henry Hub dollar basis. And I could not get my mind to function. I know what to do. Ask a friend. I go on Twitter and, someone gives me the answer. So I'm building a cult there. I'm going to move also to a closed chat platform, which really will try and attract people who want to, it'll be like, we'll badge you and get you participating really as if you were in a hedge fund and you're presenting stock ideas. And if you get a stock into our virtual portfolio, then there'll be positive consequences. So I kind of want to attract kind of kids into that, but I'm going to price for that. People are then going to say I'm a con because I'm pricing, but my time is precious. So, but you'll see all those details if you're following me on Twitter or on Instagram. And of course, I put out a podcast the podcast I was referring to.
Yeah.
You can watch that on YouTube. Again, the same name, Hugh Hendry Official. And it's also on Spotify and Apple. I think I call it the Acid Capitalist. I
Love that.
Of acid.
Yeah.
Yeah. Less of the magic mushrooms.
You're on there with your buddy, Chris Sweeney.
Yeah. So Chris, which I believe is a journalist, and actually he wrote the first copies of the book, and so he wrote for one of these. It's called The Sun. It was called. Does it exist today? I'm not sure. I think it was closed The Sun, but it was the most popular newspaper. Sensational kind of journalism. But there's an art. They say there's an art to playing the piano badly. Like you actually have to be really good at it, and there's an art to that form of journalism. And the art is it's pacing. You read it, and I wanted a book that you would read it. You read it almost on one sitting. You wouldn't want to put it down. And Chris brings that. And you need subtitles to understand because it's impossible with his Scottish accent. He has a naivete, and he's just good for setting me up on my. It's like the shows that I do are like financial jazz. I don't know what I'm going to talk about, but at the end we have 2 hours, and then I cut it to about 1 hour, and so
it's a lot of fun.
Kind of work.
It's a lot of fun.
Awesome.
It's good fun.
Thank you.
Well, Hugh, to say that this wasn't enlightening, that would be absurd.
Huh. Oh. Well, I'm going to go because the mosquitoes are killing me.
Yeah.
You did well.
And
Yeah.
I'm going to close all my windows. That's another
We'll leave you
metaphor.
to
I don't know, that's a metaphor. Yeah.
All right.
All right.
I'm going to stop the
Super
recording.
Thanks.
Hugh. Yeah, let's do this again soon.